You are listening to chartingwealth.com for Thursday, the 5th of April, 2018. We see that stocks are up for the day, bonds are down, gold is up. Let's jump into the S&P 500. By the way, our website, those of you can tell, has been hacked. It is also affecting our ability to send out our daily market reviews. However, everything is available at YouTube. Just go to Charting Wealth's YouTube channel. All of our reviews are there and all the helpful information. We apologize. We are working hard. I cannot tell you how difficult this has been and continues to be, but we will get everything back up as soon as possible. Let's jump into the S&P 500. We have another weekly down chart that is forming. That candle's getting a little bit long with the run-up that we've seen over the last couple of days. That is the upward movement. Now again, remember, we're using Heiken Ashi candlesticks. That's why 3 days into the week, we still have a red down candle. We see the derivative oscillators losing downward momentum. Price percent oscillator still headed down pretty nicely, so we still have that downward momentum that is affecting the market. Price is still below the weekly trend line, and of course, as we go take a look at the 2-day trend line, we can see on the 2-day chart pressing right up on it as this last candle draws. We have a green spinning top, which means indecision tending up. The price percent oscillator has gone completely flat instead of down over the last 2 days. Derivative oscillator still negative, but losing downward momentum. So again, we have a pullback, looks like underway, hasn't crossed over going up yet. We'll see how things shape up on Thursday and Friday. As we look at the 4-hour chart, we see that the morning was down, the afternoon up quite strongly, blowing through the 2-day trend line, still below the weekly, but those warning signals should be going off. Now, we have seen a nice blow through. We saw it pop up just over the red signal line, that is the price percent oscillator, in the afternoon on Thursday the 29th, only to rotate back down Monday and Tuesday, and then start moving through on Tuesday afternoon and then up strongly on Wednesday. So that is where we are on the S&P 500. Remember, big changes start in small charts, but small changes on small charts don't mean the start of big changes necessarily. So we'll continue to keep our eye on the big charts. Again, S&P 500 up 1.17% for the day. Now the Qs up 1.56%. Again, another red down candle in our Heiken Ashi candlesticks. Price is right there on the 2-day trend line, right up to it, still below the weekly trend line. We got to draw a better weekly trend line here, but still significantly below the weekly trend line. We have nice 3-week candles set up. We see that the derivative oscillator still gaining downward momentum. Price percent oscillator still headed down strongly on the NASDAQ 100. We look at the 2-day chart. It's not gone completely flat, but it is not going down at the same steep angle it had been back on the 2-day candle ending on the 2nd. Now again, we have more of a hammer almost. We've got a long down wick on the bottom. We've got a bit of an up wick on the top. Not much, about the width of the candle itself, but a green solid box candle going up. Again, touching right on that 2-day trend line. We'll see if that happens to block things, if that acts like some resistance, we will see. And of course, we still have the 2-day and the weekly on down moves. As we look a little closer, we see that in the afternoon, the 4-hour chart crossed over going up and pushed just barely through the 2-day trend line. We'll see how that holds. Price movement is still below that 200 period moving average. So we'll just continue to watch and see how things go on the Qs, not moving up as strongly as the S&P 500. And we'll just continue to watch. Remember, those big charts are still down. Okay, back to the weekly chart, going on to bonds. Of course, I had a weekly vertical crossover going up on bonds on the week ending the 29th of March. And we see derivative oscillator continuing to gain upward momentum. Price percent oscillator is moving up. And we see that we have a a green candlestick that is forming for the week with no bottom wick, but with a wick on top, which is typically a good sign for continued up movement. We do see things, however, on this latest candle slowing down, again, laying right there, the down movement laying right there on the 2-day trend line. We'll see how things happen on Thursday and just what occurs. Price percent oscillator going flatter. Derivative oscillator losing energy. Again, we don't have a penetration of the 2-day trend line, but we are right there on it. And of course, as we look at the 4-hour chart, what do we see? Of course, it crossed over, as we talked about in the afternoon on Tuesday. And again, up a little bit in the morning, down on Wednesday. Again, touching that 2-day trend line. We'll continue to keep an eye on things. Derivative oscillator gaining some substantial downward momentum. Price percent oscillator headed down quite strongly. We'll just continue to keep our eye on things. If we blow through that 2-day trend line, we want to be careful as to where that weekly vertical crossover might be leading us to. We want to be real careful in not staying in a trade where that weekly is not working properly. But when we look at the big chart, still headed up, derivative oscillator still gaining momentum. So again, keep our eye on things. Again, just because there are changes in the 4-hour chart doesn't mean the entire trade is over. We'll continue to monitor this and keep you posted. Lastly, we go to gold on the weekly chart. Of course, the weekly chart is still in a confirmed down move on gold since the 16th of March. Gold went up over the 2 prior weeks. We never had a jumping in point for that down move because of the up movement. Of course, we quickly had that 2-day chart crossover going up. That occurred on the 23rd of March on Friday, and then up for 2 more days and really just sideways since then. The latest down move on the 2-day chart is a red spinning top, which means indecision tending down and is busted through the 2-day up trend line. So again, if we see the crossover going down, hasn't happened yet on that 2-day chart, we might look for a jump into a down move on gold. Again, don't forget the 4-hour chart is still just barely up. That weekly chart, the 2-day chart is still barely up. The weekly chart is down. So if we get a crossover going down on that 2-day, we want to look for a potential entry point. What do we see on the 4-hour chart? Really a sideways slide. We've seen that happening here over the last few days. And of course, movement is below that 2-day trend line. Derivative oscillator losing downward momentum. Price percent oscillator still headed down. So again, we'll continue to watch, keep our eye on things. Remember, the real prize is what these big charts are doing. And there is a little bit of schizophrenia there. Going to wait and see. Perhaps this 2-day chart will cross over going down. We can have a pullback on that 4-hour chart, and we can jump in a down move on gold if that is indeed where it goes. Gold, for the record, up 0.10% for the day, just barely up. That's where we are, folks. As we end the day, we'll continue to work to get chartingwealth.com back online. Thank you for your patience. We have never had this happen before in all of our time on the web. Hopefully it will never happen again. But like I said, everything is available at the YouTube channel Charting Wealth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.